But I can tell you, looking at that spot market, it's probably the most dysfunctional physical commodity market I've ever seen. And I've seen a lot of them. And it moves around on nothing. There is this whole idea that the last bid ask is a good fair indication of the last trade. I think the price reporters are a little bit naughty in what they do there. It should be this is the last bid ask. However, the last trade was because that day when it moved $4, it was basically down on 0 trades.
Hello everyone and welcome to another edition of CEO and Market Expert Interviews. I'm your host Lucian. Most of you know me as Triangle Investor from social medias. We are joined today by another famous uranium and nuclear name. He's a portfolio manager for Tribeca Nuclear Energy Opportunity Strategy, Mr. Guy Keller. Welcome to my show, sir.
Thanks very much for having me, Lucian. Appreciate it.
Yeah, I really look forward to chat with you because I wanted to bring you in my show. You are very, like I said, famous uranium and nuclear name, and we have a lot of topics to cover. Maybe we should start with the current hot topic, and that is definitely Trump's tariffs against Canada, Mexico, and China. Energy resources from Canada will have a lower 10% tariff. Trump took a softer approach on Europe and UK so far, but we will see what will happen. Experts warn aggressive trade measures against US allies will hurt consumers and supply chains. How do you think this will unfold? How will this impact the overall uranium and nuclear energy market?
Well, the one thing I know for sure is that the headlines we got over the weekend are not going to be the last headlines. And the market reaction we had today down here in Australia is not going to be the last market reaction. So yeah. I think it's going to change, hopefully for the better, but it's going to be a moving target. I mean, we saw that in Trump 1.0. The only difference there was it took longer for other countries to retaliate. But if Canada, China, and Mexico do not have a playbook or an idea of what they want to do this time, that would surprise me. So I suspect when we come into North America trading tonight, there's going to be a lot more back and forth. And unfortunately for investors in the uranium space, that means we're going to be stuck with a little bit more volatility. But it will be interesting to see. And I think, fast forward 2 or 3 days, it's going to probably be a very different landscape again.
Yeah, agreed, especially on the volatility part. But uranium investors actually know how to handle the volatility because we have a lot of volatility in uranium. Guy, another hot topic from the last week was the impact of the DeepSeek story that is coming out and the negative effect that rolled on nuclear energy and the uranium market as well. The spot briefly touched, it was down like almost $4 after the news was out. But let's clarify it. What is important for the viewers to know is how much AI is actually included in the supply-demand picture in the current models.
Yeah, and that's a really good question. And the answer I have for you is 0 to very little in my models. Exactly. We've seen some incremental demand with US potential restarts and life extensions, but the life extensions were sort of predated data centers and AI, if you like. So I already had that in my models, and yeah, I mean, it's very little. It's kind of, I mean, it's as I said, without any of that uranium demand, the sell-off in the uranium stocks was surprising. It didn't surprise me in some of the utilities and some of the nuclear technology related stocks. I mean, that obviously was somewhere that investors were invested for that thematic. But I kind of felt a bit ripped off on the uranium perspective because we didn't necessarily get the uplift in the stocks when those investors were apparently getting in, but we saw all the downside of the headline sticker shock. I've now become much more of an expert in GPUs and hyperscalers and Javron's paradox or whatever his name is, and than I thought I ever would. But I think yes, it was an overdone move, especially in the uraniums. When the fundamentals of the next 5 years haven't really changed.
Yeah, let's stick to the volatility. We saw quite the volatility of uranium spot price in 2024, ranging between 106 in February, and then we touched like 65, 66 in December. Why was spots as volatile as it is, and what are your actually expectations for 2025 spot performance?
Yeah, look, so prior to becoming a fund manager in the nuclear and uranium space, I spent 20 odd years of my career trading physical commodities and commodity derivatives. I never, in that last cycle, traded any uranium, but had a little bit of an eye on it because it was kind of related to other things we were doing back then. But I can tell you, looking at that spot market, it's probably the most dysfunctional physical commodity market I've ever seen, and I've seen a lot of them. And it moves around on nothing. There is this whole idea that the last bid ask is a good fair indication of the last trade. I think the price reporters are a little bit naughty in what they do there. It should be this is the last bid ask. However, the last trade was because that day when it moved $4, it was basically down on zero trades.
Yeah, exactly.
And I think as well, part of the problem with the cycle sort of turning up is the physical market has let non-core players in who have worked out that they can push it around, and the brokers are happy to see the business. And so they will push it around, and generally they're pushing it around because they've got equity positions on the other side as well. So they get in, and if they're short on the thematic, for example, they'll very happily mark it down, knowing that no one's going to trade. They'll mark it down using offers in locations that nobody wants, so they'll push that through the bid. For example, they might push down Confidine, but Cameco's bid. So there's all of these silly games that go on. But unfortunately, from an investor perspective, we can't see a day-to-day activity and pricing in long-term contracts where 99% happens. So we are going to get that move, and we're still going to get an investor class on the uranium equities, especially at the junior end, who will trade their equities based on where that spot price is printing. For guys like me who are a little bit more fundamental and longer term, that provides opportunity, especially when they push it down.
Yeah.
But there's only so many dips you can buy.
Yeah. Agreed, definitely. Guy, what are you seeing and hearing about the term market and the volumes there? What approach are the utilities taking, in your opinion, right now?
Well, when you split out east and west, it's polar opposites. The east is doing everything in their power this cycle to secure as much today and future and non-produced uranium as possible. And you're seeing that especially with China. They were late to the cycle, to the contracting cycle last move, but their industry was very early at that time anyway. They're now in a very aggressive expansion of nuclear capacity, and they are short the raw material, and we've seen that across a bunch of other commodities throughout the China cycles. If they're short the raw material, it's generally very supportive in the medium to long term, especially if they're active in securing that, and that's what you're seeing. Flip to the west, and we had last year, despite the term price pushing up through all of that spot volatility and holding around that 82, 83 into the end of the year, there was actually much less contracting than the market was expecting.
Yeah.
And I think there's a mix there of US elections didn't help, and all the uncertainty around that, as well as all of that noise through the fuel cycle on US Russian import bans and Russian counter export restrictions, what Europe was going to do around Russian material. So that kind of distracted the Western utilities, I think. But it's a brave utility that sits on the sideline this year because they've got a lot of work to do. less than 100 million pounds of contracting in a market that requires 185 to 100 million pounds. You can't keep doing that forever.
Yeah, agreed. When you mention East, let's stick to the East. We saw Kazatomprom Q4 results recently. Joint venture Inkai has resolved the approval issue and resumed the mining operation with Cameco. Has anything changed in the uranium supply-demand dynamics with regards to the Inkai? With the Inkai problems, so to say.
Well, I've got to admit that Q4 result surprised me. It managed to pull up their 2024 production to be right in the middle of their stated guidance, and yes, it was revised lower over the course of that year. It didn't surprise me that they haven't changed their 25 guidance because they don't need to. Kazatomprom's got a long history of when they miss just asking for forgiveness as opposed to trying to guide the market in any real sense. But when you look at the news we had out of Cameco over 2024 on Inkai, and also the news we heard from CGN with respect to the two Chinese joint ventures where output was curtailed there to I think 5%. They've obviously worked some other assets extraordinarily hard, and they're not Western assets that have been worked hard. That's the Russian joint ventures and the new Chinese joint ventures that the Russians have signed over. So again, congratulations to them in having a pretty impressive December quarter. But is that sustainable? The issues they've had elsewhere would have you suspecting that there's a focus on some assets over others. So if that 25 guidance holds, I would be surprised if it's at the upper end of that guidance, just basis what we know has been going on.
Yeah, spot on. We are seeing some uranium companies signaling to the market that the current uranium prices are not high enough for them to start production, sign offtakes. Companies like DPL or Bannerman. What do you think? Which price could be the trigger for them and for the overall industry that could bring the new supply?
Yeah, we've had a really good look through 2024 in some of these restart projects as to what cost inflation is running at, and the most recent one was Boss, where I think from their 21 study to now was about a 30% increase in from study costs, and that's comparable to other commodities as well across the sector. So it doesn't surprise me that for years we were all sort of talking about $60 being a medium-term incentive price, and here we are at 83 term or 82 term, depending on who you talk to, and we're not at that incentive price. Because at the end of the day, you've got to add cost inflation as well as an expected investor return, we've also got higher rates as well. So the cost of project finance from a debt perspective has gone up too. So there's more return required there. So some of these projects, it doesn't surprise me that they're holding on for better prices. I think they'd love to see a floor from a utility of $100, wouldn't we all? I suspect they would probably enter into some contracts, especially if it was going to solve debt finance precedents. Maybe with a very high 8, but probably needs to be somewhere in the 90s. As an investor, I'd love to see a 95 floor just to get debt finance across and then layer in through that. The reality is, especially with tariff talk and what have you, and all of this stuff going on, I think part of the reason that utilities were a little bit slow last year is when they did start investigating and started chatting to some of these prospective miners that the commentators and WNA and industry bodies have told them these projects are coming to market. I think they've realised that it's actually longer and harder road. So potentially, they don't want to be printing a higher price yet. But I think when that's available to them, it'll be interesting. But one or two contracts at a higher price still doesn't get these things built.
Yeah, exactly. Okay, so we have those guys that are not starting the production. Then on the other hand, we have next gen fission those kind of companies, we don't have clarity with them also when they will start producing. So who fills the gap here?
Well, that's going to be the interesting outcome, because apart from the handful of restart projects that you saw coming to market in 24, you're 100% right. I mean, I think the market was kind of thinking that some of these other projects, if you've got next gen coming to market in 2029 and fission probably after that, early 2032 perhaps. I think there was the thought that some of these Namibian projects for 2 or 3 million pounds might fill that gap, but they're now pushing out to be, potentially 27, 28 by the time they all get moving as well. So it's going to be a bit of a scramble because there's no easy fix. There's no tap you can turn on. Cameco talks about all their tier 2 assets that they could bring back. They can't bring them back in the next 2 or 3 years either. And especially at these prices. So even if you did get prices moving the right direction, it's going to take time, and that's what's proving to us. So you kind of sit there and you look at those ramp-up projects that have got the capacity to maybe bring forward that capex, to ramp up a little bit quicker. They're going to be in a bit of a sweet spot.
Yeah, you mentioned Namibia. Do you think that the Namibian miners can profit massively due to a rising costs of everything in general, materials, transport, like you said, workers, and the fact that mining is simple there and the labor is cheaper there in comparison with Canada or other countries?
Yeah, I mean, Namibia, when we started looking at this sort of 8 years ago, there was a number of prospective African jurisdictions.
Yeah.
That's shrunk at a rapid rate, as we've seen various things change there politically. And the one constant has been Namibia. It has been politically stable. It has been shown that it can work with the Chinese operators there. It's been supportive of bringing Paladin and Langer Heinrich back. So yeah, I mean, it does, from that perspective, look great. It is lower grade, so it's a bulk moving operation. However, for the flip side is a lot of the deposits are quite shallow, and you're right, there's some less labour costs and what have you. You probably get to a point though, if you get 2 or 3 or 4 of these all rushing to a final investment decision, you probably will find that skilled labour, or labour that's willing to work in mining operations, that pool shrinks dramatically. The ability to get NAM water and NAM power to be connecting you on the timescale that you've done your study on, maybe that changes because there's competition for labour taking out of those utilities. So there are other factors that don't make it simple, but certainly from an African perspective, it's the best jurisdiction, and also from a jurisdictional perspective with approvals and things, they have so far proven that they're willing to work without putting too much bureaucracy in the way.
Yeah. What about Niger? Do you think that Niger is investable? And how do you think the story around Global Atomic will unfold? What will happen next, in your opinion, with Global Atomic and the financing and the production?
Yeah, I mean, it's been a story I've followed since we invested 8 years ago on a zinc dust project in Turkey with a free uranium asset in Niger. And we're kind of back there already, except they've progressed that project a lot more. I mean, hats off to management. They've continued to progress with their plans to move closer to production. They've had all manners of obstacles thrown at them. It certainly hasn't helped with the junta and the way they've dealt with Urano there. But there's more legacy, I think, of bad memories from the French colonisation of that country that's probably playing into part there. But yeah, I mean, it's a phenomenal ore body. It's the highest grade deposit in all of Africa, and and the team there have done a huge amount of work in looking at it. And there's a workforce that know exactly what to do because of what they've done with Urano and the other two projects there. But, like everything in Africa, like everything in commodities, you can have a great ore body if it's in a jurisdiction politically unstable. It causes uncertainty. So far the junta have not, or the government there, I guess now, as they're now probably referred to as, have not really stood in the way of global atomic. But you've always got a risk, so you have to have that very high risk weighting in your calculations when portfolio construction.
Exactly. Guy, what do you think? Do you see a scenario where tech companies will get directly involved in the purchase of uranium and compete with the utilities?
I think it's naive to assume that tech companies are not aware of how these nuclear power plants operate and what they need. We've seen it in the battery electric vehicle trade, where you had these disruptors coming in, new brands that were competing with the old world of ICE vehicles who were trying to pivot into electric vehicles. And that very quickly moved, in fact, much more quickly than anybody thought, very quickly moved into commodity consolidation. Trying to take, actually giving a prepay in order to get a mine built so that you could secure the lithium or the graphite or whatever you needed. So it wouldn't surprise me if that was to happen, although the way the deals are getting done in the US at the moment, where the tech companies are buying power from these nuclear operators, I suspect it's probably the tech companies saying to these nuclear operators, show us that you've got line of sight to the fuel, and not just your EUP via conversion enrichment. We want to see that you've got your hands on some yellow cake. And we're not going to sign a 20-year PPA at 2 times wholesale prices if you can't prove that you've got that. And so I suspect that's probably the first thing you'll see. There's that US utilities especially, they'll announce that, look at us, we're clever and we're contracting, but I think it'll be the tech companies that are putting that pressure on them. Because why wouldn't they? I mean, you're not going to go and sign up to gas electricity generation if there's no gas pipeline connected to the power plant. It sounds simple, but I think potentially something markets overlooking is that absolutely they're going to be all over these guys to make sure they got the uranium.
Yeah, you mentioned conversion. Do you believe that we are in conversion bottleneck?
I think short term, obviously on paper, there's capacity bottlenecks there. The reality is that can and will be solved. And so I think, that's kind of an excuse that people are pointing to a little bit as to why the utilities haven't gone upstream to uranium yet, because they're concentrating on conversion bottlenecks. The reality is there's not many utilities that need 25 or 26 uranium. They're all looking 27 to 35, and some of them are now looking out to 40 with their plant life extensions. So they've got that covered. There was obviously going to be a little bit of a scramble around Russian material. But if it really comes to it, there's enough flex in the Western system so that, expensive swaps, but swaps can be written to alleviate that whilst this extra capacity is built out. And it's not a complicated process to build out conversion capacity. It's just a capex that needed orders, and that seems to be happening.
Yeah, Guy, I want to ask about portfolio allocation, not your personal, I mean Tribeca's. Has anything changed with the allocation of producers, near-term producers, developers, explorers? Give me some color on that. So basically last year I pivoted. So we called ourselves Nuclear Energy Opportunities for a reason, because the reality is we're mining specialists, so it would have been very easy to have a uranium miners fund. But we saw that opportunity downstream and in nuclear technologies. And as that sort of data center, we actually hosted an investor lunch May last year
it was sort of ironically kind of the top of the spot market, but the turning point for the data center trade really when it started to become much more mainstream. And I flexed that fund allocation. That nuclear innovation exposure tag was about 3% of the fund. We flexed that up to about 25%. So that was the big structural change last year, where we were sort of saying to investors, this is now investable. And then on that sort of deep seat sell-off on the last few weeks, we flexed that back up again, because that had sort of just rolled off naturally as certain structures came to play, and there was some there was some stocks in that that had moved quite quickly and set off a few triggers and alarm bells here to cause us to take some profit. Because it's whilst I do spend a lot of watching things go up and down, I like to lock things in, especially if they go vertical. So the timing on that worked out quite well, and I've flexed back that exposure largely via call options, because a lot of them are US listed. So that's been an easy way to be able to sleep at night, so that if it still whips around and doesn't bounce, although most of them have started to. We sat through some of the pain on some of the restarts and managed to continue to buy some of those. That's about to start paying dividends, I think, on the basis of those that have had problems like Paladin have aired their dirty laundry and the damage is done there. And then you have a name like Boss obviously coming out and saying, you analysts are completely wrong on your costs, and we've actually been a success story. And there's a few in the United States as well, where the market's sort of sitting there saying, we think you're going to have problems, and a restart, a ramp up, they're not easy. If you think these are going to be problems, wait till you get bloody greenfields.
Exactly.
They're going to be not treated very well. But I sort of used some of that drawdown period to allocate there. And I've got a tail of explorers. The developers coming to final investment decision, it's kind of harder to own them at the moment, because everybody thinks they're going to raise some money. The developers and the explorers have been underwhelming. Just because with explorers there's no money coming that far down the capital stack at the moment. Yeah.
Final part of the interview, I have a few questions from my followers. We can go through them. The Q&A part, give me a sec. So the first question would be, what do you think is the rationale for the short sellers' action on ASX listed uranium stocks, namely BOE, PDN, and DPLO?
Yeah, I mean, that's been a cause for a lot of head scratching. I think there's a number of factors at play here. When I talk to, I'm a global fund, so I talk to investors and I've talked to companies all over the world, but I talk to investors all over the world as well. What I find in Australia is the ASX uranium trade is treated like another commodity play, so gold or copper, and so they don't necessarily play it for a nuclear thematic, and I think that's partly because nuclear is banned in Australia, even though we have a nuclear medical reactor. Nuclear civilian power is banned, although we're trying to change that. And so you started to see that roll over with the spot price last year, and so some of the ASX investors said, well, I'm watching the spot price, I don't care what Microsoft and Constellation and Duke and all these guys are doing in the US, I don't care. And then it became a bit of a thematic short, so there was a bunch of short sellers who had made money on lithium, and well done, they made a lot of money on lithium. They tried to roll into a rare earths short thesis here. They found that outside one or two stocks, there was just not a lot of rare earth. There's a lot of rare earth companies, but not a lot they could short. And so that frustrated them, and they looked at the uranium story and went, hey, that's gone from 106 to 80, and the ASX investors seem to be walking away. So we'll get short that. I think as well, there was a lot of index movement here in Australia, which took away some of that buying, and largely that was because Paladin moved up into the ASX 100. That took them out of the small cap universe, the small ords universe, all the small cap. In Australia, most of the discretionary managed money here is in the small cap indices. Anything in ASX 100 is very index, passive superannuations, tracking error on the ASX 100 index. And so you basically had 7 stocks in the small ords. When Paladin, and there was about 4.25% weight. When Paladin exited, it took about 2.2% out of that index. And so a lot of small cappers went, yeah, you know what? Paladin's restarting, Boss is restarting, the other ones are all potential FID. We don't need to be in the space because the weight's halved. So that buying stepped out, and the shorts got a little bit more courage.
Yeah.
It's a brave ASX short now. I mean, it really is, especially in Boss and Paladin. Paladin's obviously was justified being short in the previous quarterly, but they've come out recently on that December quarterly and seem to have mended their relations with the market and started to solve some of those issues in ramp up. And as I said, Boss has come out with 0 issues. So it's going to be interesting to watch, because it's 18 to 20% of free float is short in both those names.
Yeah, it will be interesting, definitely.
Yeah. I tell you what, I won't be selling them anything as they're trying to get out. So good luck trying to find. Good luck for them to try to find it.
Yeah, Guy, let's move to the next question. What impact do you believe an LNP, Coalition Liberal National Party, win or loss at the Australian election this year will have on ASX uranium stock sentiment from the local investors?
Yeah, that's a really good question, and I've been getting more vocal and active in sort of nuclear education in this country. And people say to me, why are you doing it? I say, well, if Australia lifted the nuclear ban when and if the government changes the next few months, it's not going to do anything to my investment thesis on the nuclear side. It's not going to make me or lose me any more money. However, it will change the sentiment and approach to uranium mining in this country. So those states where it's currently allowed, which is basically South Australia, I think we'll see some real near-term benefit. But the other problem in Australia is the state of Western Australia has a policy of the current Labor Party government, and there's an election in March in Western Australia. It doesn't look like that party's going to change. However, the approach to uranium may soften, not guaranteed. And so if there was a federal government in coalition, even though they're opposite sides of politics, who lift the nuclear ban, and then as a result of that, trade unions and industry start pushing the West Australian government, Queensland government's the Liberal Party LNP, but they've got a lot of other issues at the moment, and there's nobody in Queensland trying to lobby them to get their projects, and that's a moratorium, so that requires a vote in Parliament. There's no one lobbying necessarily the new Queensland government, but again, federal changes, you may see changes in Queensland, Northern Territory, and Western Australia in that order, which would be beneficial to those names, and I think immediately in South Australia, because they're already pro-nuclear, pro-uranium.
Yeah, the next question, do you have any insights into on the sulfuric acid supply situation in Kazakhstan? Are there any indications that the Kazakhstan increased the use of Russian acid in their mines?
Oh, I mean, it's you're kind of really relying on whatever the Kazatomprom's telling you. I've no doubt they are working very hard to secure more sulfuric acid, and it would not surprise me if Russian sulfuric acid is being made available to them for the Russian joint ventures, which may explain that December quarter. They're going to have to solve the problem for the next 3 or 4 years, because already that acid plant that they're building locally to try to alleviate that bottleneck has had delays. And so it remains to be seen whether they can even build that successfully to their revised timetable. So around the periphery, unless they can find another proper source of sulfuric acid, they're going to have to rely on China get it through Russia. As I understand it, there are other competing demand uses for that any sulfuric acid, so not automatically for uranium. But am I going to see big increases on their subsoil use agreements and production? Not until they solve that bottleneck.
Yeah. Next question. What are your expectations for Kazatomprom 2025-2026 production numbers?
I don't believe they're 25 guidance. I think they'll be hard pressed to get there. And if they do, it would be the bottom end. And I would not be surprised if they came out at some point and revised it lower. I mean, the Kazakhs have revised their production guidance lower, I think, almost every year since like 2018 or 19 or something. And so it's been a declining schedule. When you look at that strategy day slide they put out, and they went at great lengths to have it in big red letters across the bottom, illustrative purposes only, there was no supply growth. It was marginal at best, and then falling off a cliff in 2030 unless some serious investments being done.
Yeah, good answer. Next question. Do you believe that Cameco will sell their JV at Inkai? And if yes, to whom?
If they did, it would be because it was beyond their control. There's no reason for them to want to exit that joint venture, because it provides a valuable source of uranium for them, and it's reasonably, it's very low cost compared to their other options. So it would have to be something that was beyond their control.
Yeah, probably. Final question. Do you have any insights on the progress of exploration on the other side of the border? The Athabasca from Hurricane deposit. Any noises about potential M&A coming from Cameco or Orano?
This is up near bordering ISO, right? In La Roque up there, is that where you're talking?
Yeah.
Yeah. Look, I think so. I was actually out that way last year, and we flew over a broad part of the Athabasca, and we actually visited ISO's exploration camps up there, as well as other stuff on the west of the basin. And there was no doubt that Cameco are in there drilling that side of the border. The reality is that if they were to stumble across a big extension of that ore body and prove things up, they don't actually have to disclose it. Every explorer wants to disclose every single drill hole because it's going to be good and material for their share price. So you could actually see a scenario where Cameco continues to drill there, and whether they find or don't find uranium, we just simply won't know, because they'll just say it's not material, and they're not prepared to announce it. Or we want to make sure it's an actual resource, but we have no plans on doing infill drilling. So right now it's an estimate. We're not prepared to talk about it. So that's kind of the problem, and you see it across all commodities. There's so many investor hopes dashed because they've held a stock thinking that a major's going to buy it because it's next door or it makes sense, and the major holds out much longer than the investor can. So you need to own these projects because of the merits of what the company who has that tenement is doing. And if Cameco was to come out and say, by the way, we've found a whole bunch of high grade continuation, then you get that kicker. But again, it doesn't then mean, it's not going to mean that they're going to necessarily take it out. I concentrate on those companies that are exploring with the drill bit. What are they doing, and what can they do with my money to give me a return on that? Because as you well know, explorers are a constant drain on cash flow, and they perennially come raise and so you need them to be doing something proactive, and to a point where they're getting shareholder response from it, so it goes up. So that's what I look for on the explorers.
Same here, agreed. That was Guy Keller, portfolio manager for Tribeca Nuclear Energy Opportunity Strategy. Guy, thank you very much for this interview, for this chat. It was a great one, as I expected, and I look forward to host you again.
I'd be happy to come back. Thank you very much for having me.